It is time for business, and I hear that Laddie Williams is standing by. Stay tuned. We'll be back afterwards.
All right, Kayla, thank you so much. Well, it's business morning time here. Time to get the top stories that set your agenda for investors right here and outside the country. Let's start with the oil market now. See, oil prices saw a consecutive decline, even with China's commitments to reshape its economy amidst sluggish growth following a COVID-19 pandemic. These pledges failed to instill confidence among investors who remain apprehensive about decelerating consumption trends. We see Brent futures for May down about 0.2% at $82.64 a barrel. WTI crude as a U.S. grade, $78.46 a barrel, down 0.4%. Well, with all the output cuts we saw from Russia and Saudi Arabia and all the pledges, prices did react positively, but we're seeing a downward trend there for the price of oil, and definitely we need to export sell more oil at this point so that we can get more revenue to help shore up our FX reserves at this time. But we'll see all the stories now. We see importers in Nigeria may be getting some much needed relief as the Central Bank of Nigeria slashed the exchange rate for computing customs duties at the nation's ports by 5.3%. The customs FX duty rate dropped from 1,630 Naira, 15 kobo per dollar, to 1,544 Naira a kobo, representing about a decrease of 86 Naira, 78 kobo per dollar, to clear goods from the ports. Importers have been experiencing a lull at the ports, with many citing unfavorable business conditions due to high import duties and fluctuating FX rates for duty calculation. And still talking about the FX market now, see the exchange rate between the Naira and the dollar strengthened for the third consecutive day, closing at 1,547 Naira to the dollar on the official market. It marks the strongest level the Naira has reached in 7 days. The intraday high reached about 1,600 Naira to the dollar, while the intraday low was at 1,425 Naira to the dollar. The official exchange rate has remained below the 1.6 level since February 28th. Could this mean a gradual return to stability in the official market? Well, I guess we'll find out later on the show. All right, let's look at some data now from the NBS for air travel. See the average fare paid by air passengers for specified routes, single journey. That was about 89,975 Naira in January 2024. That's an increase of 5% while compared to the month before, that's December 2023. On a year-on-year basis, the fare rose by 20.53% to 74,648 Naira in January 2023. Meanwhile, the House of Representatives Public Accounts Committee has given a week ultimatum to all private airline operators in Nigeria to account for a 4 billion Naira collected from the federal government as COVID-19 intervention funds, or refund the money to the government treasury. Well, joining us now is Professor Obiora Okonkwo, CEO, United Nigeria Airlines. Joining us from our Abuja studio. Great to have you on the show, sir.
It's my pleasure to be here. Thank you for having me.
Fantastic. Good morning. So, looking at the data from the NBS, we're seeing airfare prices have, consistently risen. 5% jump month on month from December 2023 into January 2024. And I'm wondering, how much can the average consumer take at this point?
Well, as you can see, the cost of everything is rising in Nigeria, and the reason is very obvious. It's all about the inflation rate that everybody and every sector is experiencing. So for us in the aviation sector, even the rate that you have today is still a pitiable rate, because at that rate, for any ticket sold at that rate, I can assure you that the operator is absorbing the cost of almost equal amount. So if you have bought a ticket to fly at anything less than 150,000 to 200,000, somebody else is paying the bill, and that's the operator. So we're operating at a huge loss now, simply because we cannot meet up the speed of the changing rate of the Naira, and we are very sensitive to the burden it could have on an average traveler in Nigeria. So it's really a very difficult time for the sector, and I hope something should be done very soon and quickly. Otherwise, you might see a whole lot of operators very soon going under, because the operating environment is very, very tough.
Now, looking at the official FX window there, we've seen about 3 consecutive days of stability right now, and I hope that continues, going forward. But, this is early days for 2024. For you, what are you seeing are the immediate solutions, we can provide this time so that we can see prices? Because most times we see prices go up and never come down. What do you think can be done in the short term to bring some kind of, sanity to prices in the short term?
Yeah, well, we are happy with the success recorded so far in the last 1 week, and it's our hope that we'll continue to come down below 1,000 probably. And we've always said that one thing very, very certain to do is that government should look inward and find out where these problems are coming. It's not from outside. I, for one, believe that these rates are quite speculative, and I've said in some outings that the people who do have access to huge cash today are government officials. If they are not governors, they are government appointees, and a whole lot of money circulating around the government sector. This is about periods to award contracts, and so the case of the FARC. Government should look inward and make sure that these people don't go into the foreign exchange market to mop up what is there. And the amazing thing is that these things are mopped up in cash, and they're stored in some warehouses or stores, a condition somewhere, and it's not helping our economy. So as much as they should do that, it will reduce the pressure on Naira. And obviously funding the forex market is very, very critical. Government is struggling with a whole lot of revenue inflow. I've suggested they should quicken the process of taking NNPC to the stock market. That will help them raise a lot of money, and also download some of the NNPC assets that are in some partnership. They should do that. I have no doubt that when that is done, women should be able to raise between 10 to 20 billion US dollars, and that will definitely support the wage they need now for the Naira. Something has to be done, and CBN should be bold, very, very bold. I'd said in one of my outings they should control the narrative. That's good. They seems to be doing a lot more about it. The CBN governor has been giving some interview, and they're letting Nigerians know what they're doing about that. That's a good progress. They should do more of that. Certain bold steps must be taken without fear or favor on who that will affect. You should look into the banks to make sure that some of these diaspora inflow that we are supposed to assess is coming in and is being made available for real sector and general people to use, that it's not being stopped at some point for other intentions of the bankers. And I also should think that there should still be special window for some sectors of this economy. I still believe aviation is not getting the attention that it requires in this foreign exchange saga. The money, the language, and the official money for aviation is dollar. I know other sectors are affected, but in terms of category, aviation is number one category. It's a catalyst to economic growth, and if we don't do that quickly, and it affects this industry that negatively, obviously the multiplier effect will be enormous, and it will not go well for the country and the economy.
Right. All right, Professor Okonkwo, I did mention earlier about the House of Reps telling some of the operators, the airline operators in Nigeria, to account for 4 billion naira COVID intervention. What do you make of this? Because now they're calling for a return. You know, these monies were not spent well.
To start with, the money that was given to the operators was just 3 billion, not 4 billion. And I guess that they are probably not properly informed. When they are properly informed, there will be no need for this call. It's really not anything to worry about. I believe when that money was shared among those who received that, it's such a very minor and tiny money that nobody should be worried about. There's no operator that money could even pay a 1 month salary of its of the staff contingent. So I don't think that that is an issue that we should that we should spend any time to talk about.
So the operators won't have any problem returning those monies then?
Returning? Did you embezzle money that they're asking them to return?
Because the House of Reps are saying some of the operators didn't spend these monies on what it should have been spent on.
Well, I wonder what they know that should be spent on. You know, and during the COVID, some sectors were supported. And even if you look at that money that was given the aviation sector, compared to the support that their equivalent got in different parts of the world, that's very ridiculous and laughable. It does not even solve any single problem. I think the problem is that the committee have not really been properly briefed. And this money came from Minister of Aviation. It did not come as a form of loan. It came as a form of support grant to cushion the effect of the COVID-19, which we consider very, very minor. It's nothing. We still feel that nothing was done to that industry. So I really think that the call for return is just too much of a soundbite for the news. We're going through a whole lot, and we don't need that distraction now. So if you want to call for return, any operator can easily write that check without even. But there's really no need for that. This money came from Minister of Aviation, and if anybody should ask for that, I know the National Assembly have good gentlemen who are doing their job, but I hope they will find that call for meetings a couple of times, but I can, each time that we attended, some of our representatives were in that meeting, the meeting did not hold. So I'm surprised that I jump into this conclusion without even interfacing with the operator. So my advice is that they need to sort for information from Minister of Aviation, need to clear the conditions and times for that money, for which that money was given, and then from there, and then we should be communicating from Minister of Aviation. But I really think that there's truly no need for this big headline and discussion. We owe nobody no money, and it wasn't money that was given for any other reason than just a grant. It was very specific and direct. So if government should wake up and say we're converting grant to loan and they have to pay back, then that we will live to see that.
Right. We'll definitely. It's a developing story. It's a developing story. We'll keep tracking that one at this time. But you did talk about the central bank making bold moves at this time. And right now we've seen at the last meeting interest rates now at 22.75%. Making cost of borrowing even more expensive, and we see cash reserve ratio for banks there 45%, meaning if a bank gets 100 naira, about 55 naira, that's all they have to keep, at this time. So looking at 2024, credit is looking like it's going to be very expensive at this time. How are you operators planning to navigate all of this?
Well, theoretically, in a situation of this nature, as an economist, when you see this hyperinflation in a system of this nature, the steps CBN has taken looks okay. But the fact of the matter is that the reality on ground is different. The sense CBN has told us that greater percentage of the money that's supposed to be seen in the circulation is not there. So if they think that this inflation is being driven by too much money in circulation for the reason they're introducing all these tight measures, the question is, where is the money? The money is not there. So I believe that increase of this exchange rate and raising the deposit amount for the bank in the CBN will make the situation worse, because business people need to access money at a considerable and reasonable rate. And this money is not available. When there is inflation, it's eating up your own capital. And when you have lower capital, you cannot operate. And the only thing you need to do is to beef it up. And where the money should come from should be from the bank. And when the banks have little or nothing to lend, and the much they have to lend is at a very high interest rate, then it will not be good for business. So, and when business is not done, revenue is not made, income may not be available, and earnings of government will obviously be lower. So, and obviously people may have to lose their job, and businesses will continue to close. That's not good for economy. So I really think that this approach to it, CBN, have taken certain measures that are by the books, but in reality, I don't think that's a reflection of what we're seeing on the ground.
So you mean we shouldn't go by the books at this time, when it comes to taming the kind of inflation we have in Nigeria?
Oh yes, it should not be by the books. They need to look deeply and look at what is unique to us. We have a peculiar situation that these things are different from what you might have seen in other places, because this money that is in their books, that is out there, is not circulating. It's not circulating, and it's circulating. Those who have 80 to 90% of the money are not those who are putting this money in business. This money that are stored in different accounts or in cash in some homes. So I wouldn't want to take it that it is just because of that we have this inflammatory rate. Yeah.
Okay, and also the central bank governor did say no more interventions, from the CBN. How do you take that? And if you're looking for some kind of intervention for the aviation industry, what would you like to see?
Well, the CBN has the right to take decision, but intervention is inevitable. All parts of the world, there are ways, there are special intervention to special sectors to achieve a particular purpose. Intervention is inevitable in agricultural sector, in aviation, and so many other similar places. If they had moved the intervention from agriculture, that's the reason why we have this food scarcity and high cost of products in agriculture. And so I'm surprised they are looking at the warehouses where people are hoarding food and all that. That's not the cause. Some time ago, successful governments in Nigeria had done very good support program for agric, and the result was clear before now. We were food sufficient, the rice you could get at any corner of Nigeria, and the prices were stable. This intervention, there's no government in the world that does not intervene in certain critical sectors. If you don't intervene in the production process, you intervene also in the spending power of the citizens. Just look at it. We can't just walk away. I do not think that they should allow the economy to flow. We've seen the effect of allowing Naira to flow, and you see where it's taking us. No country does that. We have a weak economic system, and then we need to guard it very, very jealously and very, because it's very delicate. If we allow that, we continue to fall into a bottomless pit. Yeah.
Okay, Prof. Well, we'll be looking forward to the next meeting. Hopefully, maybe we can see some interventions trickling as the meetings go by. Thank you so much for coming on, Professor Obiora Okonkwo, CEO, United Nigeria Airlines. Thank you so much.
Thank you very much. Well, we hope CBN will reconsider their position, because that's really what the country needs now.
All right, we'll be looking forward to the next meeting. Thank you so much. All right, now let's definitely, I did talk about the Naira earlier, and it's remained below the 1.6 level since February 28th. Could our FX woes be over? Time for the commodities market update, and we have Dumebi Oluwole, senior economist, FDC, join us right here. Is it too early to bring out the champagne? The Naira is strengthening. Is it time to celebrate?
I would say just hold on.
As you hold on.
Let it keep chilling.
Put the champagne down.
Yeah.
Okay. All right.
Not down, in the fridge.
In the fridge.
Meaning there's time to.
So I'll still pop it at some point.
Exactly.
Okay.
Exactly.
So how are you seeing it?
I mean, I would say it's some respite that we're seeing. And obviously, because of positively anchored investor sentiment and also market expectations, and this is split in two ways: inflation expectations and exchange rate expectations. The CBN did make a very bold call at the MPC meeting, and one of the reasons why they did do that is so that they're able to positively anchor market expectations to taming or bridging the gap between interest rates, effective interest rates, and inflation. And we're seeing this gap beginning to narrow. TBO rates are already higher, and we expect that trend to continue as the monetary policy transmission mechanism, continues to strengthen. So basically, we're seeing a more hawkish CBN sticking to its core function of achieving price stability. And what this is doing is anchoring inflation and exchange rate expectations positively. We're also seeing that the CBN is trying to reduce money supply growth, or at least reduce the rate of increase in money supply. And the thinking here in terms of, I would say, economic theory now is, when there's too much money chasing too few goods. And the too few goods now that we're looking at is the exchange rate, the demand for dollars. So we've seen money supply completely surge between January 2023 and January 2024. We're seeing an increase of over 70% in money supply. So clearly there's a lot of, there's a lot of Naira right now. Whether it's in the hands of the people, it's another conversation. But from the data, we do know that there's a significant increase in money supply. Cash in circulation is also high. But the question now is, the people that have this cash, what exactly are they using it to do? And one of the big things is the Naira that is in supply today is being used to demand for dollars, either for hedging or for purchase, for imports, or speculation, whatever it may be.
Right.
We're seeing that increase in money supply growth correlates significantly with the demand, with FX demand.
And
that's one of the drivers
of speculation, we know Binance has been in the news, that P2P market.
Yes.
And ever since that P2P market, that's been, shut down for now, we've seen some kind of stability.
I mean, I wouldn't draw such stark correlations,
right,
simply because what is fueling all of this is there are lots of things happening right now. We're seeing effective interest rates increase. It is very possible that people are moving their Naira, instead of trying to demand for more dollars, they're investing in treasury bills to get higher yields. There is that happening. We've also seen the CBN also kind of address dollar demand from commercial banks with the circular that they released, I think immediately after the devaluation that happened earlier in January. That is also an effect that we could see happen here. The other thing is, people are probably just, people don't really have enough money to actually make this, so much demand for dollars. So there are a lot of things happening, a lot of factors that could have led to this. It could definitely not only be Binance. Right. And that's also not to say that it's not possible that, this is also one of the things that have driven the demand. But to outrightly say this is the reason, I would say that's very wrong, because it has nothing to do with market fundamentals.
Okay, so we will definitely take that and see if this is actually sustainable, because we're hoping, that this, strengthening, continues, going forward into 2024. But looking at prices now, commodity prices, at the end of the day, the average man wants to know, is this going to bring down the price of Gary now that we're seeing stability, with the dollar?
I did expect that question. And I would say that an increase in interest rates is supposed to do that. But then there is a lag effect. The interest rates were increased February 26th or February 27th. Prices will not come down until about 6 months after. There is that lag effect, especially for developing economies where the transmission mechanism is really slow. So typically for a developing economy, what we expect is when there's an increase or a change in monetary policy stance or monetary policy tools and adjustment of interest rates, it does take about 6 to 24 months to have a complete effect, to have the desired outcome that we need, and which is a significant decrease in inflation. That is not to say that we would not start seeing that tempering, start to happen. It will happen, but it would happen at a very slow pace. And remember that the inflation numbers that we're going to be hearing, we're going to be seeing very soon, I think that's by middle of March, at the inflation numbers for things that happened in February, which we still expect, to be very high. In fact, we do expect inflation for February's headline inflation to actually come in at about 30%, and that will be the highest inflation in Nigeria's democratic history. Now, moving on to how it would reflect in the price of commodities, I did say it will take time for that to happen.
6 months. Or
so the near term, exactly, and we don't. We most likely would not see another rate hike by the March meeting. It's just too close for another, tightening.
Maybe some kind of hold.
Exactly. So the CBN might most likely would maintain interest rates where they are, and the reason why they would do that is to say they want to see the impact of how the first rate hike, definitely translates into reduced money supply growth, reduced inflation, and more exchange rate stability. And again, just back of the question that you asked me about prices. So what I'm saying is we would not see prices begin significantly decline in the near term. Prices will still remain elevated simply because the exchange rates used to import the pasta that you were consuming earlier in the year or maybe last year are significantly jumped, even at 1,500, even though 1,500 is somewhat stable today. So it's still significantly higher. Businesses will still pass down the burden of higher importation costs, higher operating costs. Remember, there's electric power supply. They will pass down this burden to consumers in form of higher prices. Logistics costs are still very high. Insecurity is still happening. Agricultural productivity is still low. But what this definitely calls for is a consolidation between fiscal and monetary policy authorities. We cannot say the monetary policy authorities are not doing their job now. They are. They need to do it more, but they've already started. They've kick-started the engine, and the fiscal policy authorities now have to come to the table. There's no longer room for flamboyant spending. If we're going to spend or even intervene in any sector of the economy, it has to be extremely targeted to the real sectors of the economy that can employ people and contribute to consumer spending and consumption positively. More importantly, it has to be able to equate to productivity in the economy to support output and support GDP growth. So what this means is we cannot see spending on things that do not make sense. Right,
and I'm talking about things that do not make sense. Things that do make sense, like I was at pharmacy yesterday trying to get some multivitamins, and I saw the price and I was like, you know what, maybe I should go get fruits instead. Maybe I should get my vitamins from fruits, because the prices are incredible.
Ridiculous.
But you also go to the fruit market and you see the prices of the fruits are also high. So we're hoping for stability, going forward at this time. But that's the most we can take. Thank you so much, Abdul Oluwole, senior economist at FDC. It was great having your perspective today.
Thank you.
Right. So definitely, we're seeing the markets at this time. Yesterday's close. Let's just get a quick check. See how the NGX managed to close yesterday. We see 0.10%. That's the jump there. 98,847 for the first trading session this week. 55.88 trillion That's the market cap. And you know, we did get that first listing of 2024 yesterday. That's Transco Power. So the market closed green yesterday. We're looking out for how it's going to close today after the bell today. Thank you so much for watching. I'm Ladi Williams. I hand things over now to the Sunrise Daily team.